Hi everyone and welcome to this YouTube channel. So before we get started, make sure to hit that like button, also subscribe to my channel. Top 10 cryptocurrencies that will survive even a massive market crash. As valuations reach new highs, the mood in cryptocurrency markets is increasingly being compared to the craze for dot-com companies at the turn of the century. When that mania subsided, companies without a business model and with multi-million-dollar valuations went bankrupt. The situation in cryptocurrency markets is not dissimilar. Not much is known about the overwhelming majority of 1,385 coins available in the markets today, but they are still being bid up to multi-billion-dollar valuations. As an example, Dogecoin, a cryptocurrency that was intended as a parody of the Bitcoin boom, has a valuation of $1.6 billion as of this writing. The coin has no clearly defined use case or characteristic to justify that value. Nolan Bowrell, research director at CoinDesk, says 90% of cryptocurrencies today will not survive a crash in the markets. Those that survive will dominate the game and boost returns for early investors. And those returns are substantial if one were to believe RBC Capital's estimate of a future $10 trillion market for cryptocurrencies. But identifying survivors in the cryptocurrency markets is easier said than done. No single currency has gained mainstream traction or is even close to achieving it. Even Bitcoin, the world's most valuable and popular cryptocurrency, is plagued with scaling issues, such as high transaction fees and slow networks. Jake Brookman, the founder of CoinFund, a Brooklyn-based blockchain technology advisory and investment firm, says fundamental factors are not reflected in current valuations of cryptocurrencies. It's just a bet that information and awareness will lead to adoption of said cryptocurrency, Brookman says. According to him, forward-looking sentiments about decentralized networks are reflected in pricing for cryptocurrencies. Evaluating cryptocurrencies. Christopher Gray, co-founder at Caplinked, an enterprise software company, identifies 3 areas that investors should focus on before putting their money into the asset class. The first one is the experience of founders and project teams. The world of cryptocurrencies and blockchains may be nascent, but its roots lie in established industries. For example, Ethereum's smart contract tokens are used to connect elements within established industries. As such, experience matters. If a project team member has no crypto or blockchain experience, an investor should ask, how does what they've done before make them qualified for this project? Have they been at least involved in the same industry, says Gray. Investors should also peruse the terms of offerings. 2 important points to consider in this respect are the amount raised and how much of it accrues to investors. Conventional metrics applied to stocks do not apply in this evaluation. This is because cryptocurrency markets are a reversal of typical market paradigms, in that founders might ask for funding before they have a sustainable customer base or product traction. If someone wants to change the entire world of finance and are only raising $5 million, that would be a big disconnect between what they want to do and how much money they are raising, explains Gray, adding that the opposite also holds true. In other words, the clearer the focus of a company, the better its prospects. Finally, investors need to look at the technology itself. If it's just an idea, a white paper, without anything built, you'll be stuck only believing in the team. And if that's the case, it better be a really good team, says Gray. If a team has built a product, how does it work? There is a caveat to this assessment. Brookman says cryptocurrencies are among the least interesting applications of blockchain. We don't really have a good grasp of that, he says, in a reference to how markets might be disrupted by cryptocurrencies. So, which cryptocurrencies will survive? A good place to start is the top 20 most traded cryptocurrencies. It is easy enough to determine some prominent survivors in this listing. If and when a crash does occur in cryptocurrency markets, Bitcoin is the original cryptocurrency and is fast emerging as a store of value. Its blockchain and codebase also spawned offshoots, such as Litecoin and Bitcoin Cash. Both are angling to become the preferred cryptocurrency for daily transactions. Ethereum's world of decentralized applications, or dApps, is fast gaining traction and is responsible for a slew of tokens, such as Populous, which are built off its platform. Others, such as Dash, have also staked similar claims and have carved out niches in emerging markets, such as Zimbabwe and developed economies like Spain. NEO might turn out to be the dark horse. It is aimed at the smart economy and is working closely with the Chinese government to grow the cryptocurrency ecosystem within the country. It has also announced a strategic partnership with Microsoft China and has worked with the likes of Japan's Ministry of Economy. Moving down the list, however, shows cryptocurrencies where investors will need higher risk tolerance. For example, Tron, a cryptocurrency that surged recently, does not have a product in place and its founder is relatively inexperienced. Similarly, Request Network claims to be the future of commerce, but that vision itself is actually a recent pivot from one for an online money transfer aggregation service. The cryptocurrency's white paper announces multiple use cases for its coin, from the Internet of Things to online payments and implementing business logic for government laws. But the startup has precious little to show by way of partnerships or experience in those areas. Investing in cryptocurrencies and other initial coin offerings, ICOs, is highly risky and speculative. Each individual situation is unique, and a qualified professional should always be consulted before making any financial decisions. Investopedia makes no representations or warranties as to the accuracy or timeliness of the information contained herein. How does cryptocurrency work? Cryptocurrencies run on a distributed public ledger called blockchain, a record of all transactions updated and held by currency holders. Units of cryptocurrency are created through a process called mining, which involves using computer power to solve complicated mathematical problems that generate coins. Users can also buy the currencies from brokers, then store and spend them using cryptographic wallets. If you own cryptocurrency, you don't own anything tangible. What you own is a key that allows you to move a record or a unit of measure from one person to another without a trusted third party. Although Bitcoin has been around since 2009, cryptocurrencies and applications of blockchain technology are still emerging in financial terms, and more uses are expected in the future. Transactions including bonds, stocks, and other financial assets could eventually be traded using the technology. Everything you need to know about cryptocurrency. Whatever your learning style, there's a course that can help you become a crypto expert. With Udemy, you'll be able to take courses that span over 65 languages and cover just about anything you want to know about cryptocurrency. You'll also be able to set up a crypto wallet to hold your digital coins and choose an exchange that fits your trading needs. Cryptocurrency is a digital payment system that doesn't rely on banks to verify transactions. It's a peer-to-peer system that can enable anyone anywhere to send and receive payments, instead of being physical money carried around and exchanged in the real world. Cryptocurrency payments exist purely as digital entries to an online database describing specific transactions. When you transfer cryptocurrency funds, the transactions are recorded in a public ledger. Cryptocurrency is stored in digital wallets. Cryptocurrency received its name because it uses encryption to verify transactions. This means advanced coding is involved in storing and transmitting cryptocurrency data between wallets and to public ledgers. The aim of encryption is to provide security and safety. The first cryptocurrency was Bitcoin, which was founded in 2009 and remains the best known today. Much of the interest in cryptocurrencies is to trade for profit, with speculators at times driving prices skyward. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.